Hey guys, good afternoon. Welcome to 12-Minute Trading. My name's Doc Severson. Today is Monday, the 12th of May. We have a little bit of a breakout going on. And I am joined here today, he's on this side now, with Dave Lukas at 12-Minute Trading. And Dave was gone last week, so he's back. And boy, last week or the last couple of weeks, I was talking about the fact that we're either going to see a drop back down to a higher low, or we're going to see an explosion above this volume profile, and we've seen the explosion today. Now, what I don't know, and a lot of this depends on tomorrow's CPI, is this just a retail bull trap, or is this the market giving the queen wave to the rest of the retail, saying chase me if you can? What do you think, Dave?
I was thinking about this because coming into this weekend, when I was writing to my students in my newsletter, here's what I wrote, right? So it was like my question was, are we seeing the top of the move? The SPX, NDX have both hit those key levels, been rejected twice, right? Daily energy was charged back up in the 40s on that stuff, but turned a little bit lower Friday with that small amount of selling. And there wasn't a ton of energy to push things like either way from here coming into today, right? But the 40s, I mean, you're really halfway to exhaustion right in that range, right?
Yeah.
So my thought was like I think we're either going to see sideways week with some potential movement around CPI, PPI, right? As a catalyst that could have given us like a quick trip lower, right? And I said I'd prefer to see that, right? I think the best and healthiest thing for this market really would have been a nice pullback to cement that higher low and then, rip higher from there. But the next sentence I said, of course, there's a number of variables like China trade talks and other things that can affect markets, right? Purely from a price standpoint, that's what things are looking like. With being in a position where we are literally one Truth Social post or tweet away from a 180-point move in the SPX, you have to kind of throw typical price action and stuff out the window, right? That was my caveat. And, I don't think anybody expected results to come out of the trade talks, like definitive results. I think they expected, some like, hey, we've made some ground, and we're going to continue to negotiate, and we're not changing anything yet. Like I think the markets were prepared for that, so this is kind of a shock that there is something. But I mean, still, you still have 30% tariffs on it and everything else too. So like, I think that a lot of algos and stuff are hitting today. We have taken out the daily energy now. The daily energy is just about on the floor. So I don't know. I don't know if we'll give any back at the end of today. I don't know if that's in the cards. It's been and staying pretty strong. So if we're going to give any back, it'll be in the final 30 minutes of the day. Maybe we dip back under 5,800 on the SPX. Maybe, right? But I think the rest of the week, like I think this is the move for the week. The rest of the week will determine if we continue higher or we get a pullback. Now, at this point, a easy pullback would be to fill that gap to 5,700. And I can see us doing that like in a day. And then just that would cement it and then shoot back up. The weekly chart is charged enough in the 50s. It is dipping down. So that can be the beginning of the weekly swing higher. Like we saw the weekly swing lower. Now we can be seeing the weekly swing higher. So yeah, we could be at the beginning of that typical move that goes into summer, into July. Then you get that swoon July into August, right? After this weekly move plays out. And then you're back into the fall time. So it's kind of like, hey, let's see how this week plays out. And let's see if Powell decides to, put a damper on the markets. When he speaks, what, Thursday? Is that right? And see what CPI PPI does, right? That's kind of where we're at.
CPI is tomorrow morning, and right now consensus month to month is 0.3%, and that is everything and core. So month to month, 0.3%. That's the number that the market's going to look for. Now, last month, the number was negative 0.1%. So we're on this sort of downward pressure. So if we do another beat on CPI, it's going to be, I think the market's going to put a huge amount of pressure onto Powell on Thursday. And so Powell's set up to either play along with that, or Powell's set up to hugely disappoint. And maybe if Powell, so let's play this out. So if we come in and beat tomorrow morning on CPI, and then set
Hmm.
up, the market would probably at least marginally rally into something like that
Yeah.
for the
Yeah,
next
you
day
get
or
more
so.
rally.
Right. And so we get into Thursday morning, Powell comes along and he's like, "Oh, blah, 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 hawk, hawk, hawk." And there's your gap fill right there. Right then and there, I think.
I think you'd get it like for a day or two,
Yeah.
and that would charge the daily chart back up, and then you'd be on your way again.
Yeah.
I mean, this market, we are, as of today, higher highs, right? As of right now, I don't know where we'll close, but right now the S&P is the gap today has got it to a higher high, right? Taking out that previous, high that's been sitting up there around 5,700 and change. So we've got that. We've blown through the 200-day moving average. So that did not really act as resistance at this point. We're kind of right around it. And so, like, I mean, we could be getting the change in polarity back. And that's what you do see with these policy driven events like this, right? They typically last a shorter term, like 3 to 5 months, where, structural downtrends last for, and you just compare where we came out of, right, from the last bear market, right, that goes for 12 to 18 months into like a COVID was, event driven, like when policy came in and saved that. This is a policy driven thing. And so, we can turn right back around and resume the trend, right?
The
So
the whole the whole
that is possible.
the whole point behind all the fear lately was, okay, this is a policy event which is going
Mhm.
to create downstream issues down the
Yeah,
road, of which, and so far what we're seeing is that maybe this is not going to happen.
right.
Because I mean, the rumor was a month ago, oh man, there's no shipping in Long Beach ports. There's no cargo containers coming in. Everything is ground to a halt. Like the economy is
That was
stuck.
all BS though, right?
That
Because
is
all China was
because
doing was sending it through other countries. And so
right,
the ships hitting the ports and everything were actually higher, right?
right.
So I mean, there's a
So
game to play around all this
that's
stuff.
over. And so all of this FUD has
Yeah.
sort of been washed away. And so
Yeah.
this is almost, we're gonna,
A
right
V
now,
bottom.
we're looking at this, and it could be very, very similar to what we went through with the COVID recovery, almost a V bottom.
Yep. Yeah, so I mean you can see though, look at the daily, the energy is about to exhaustion. After today, it'll really be into exhaustion. You got that weekly that didn't get fully charged, turning back over,
Yeah, but
but
it's enough, and it's enough, and so is the monthly
it's
chart.
enough.
It's enough. It's
Yep.
enough to power things. It's
Yep.
enough. It's enough to print new highs
Oh
on
yeah.
on both of these charts. It's enough to print new highs. Now,
Yep.
just to be fair, and this is where, quite honestly, looking
Hmm.
back at this, if we look back at what happened in 2022,
I was about to say you're going to compare to 2022.
I well, I think we owe it to ourselves. Let's see, is this 2022? Yeah, it is. Okay. So here's the move, and I'm not suggesting that we're going to see exactly the same thing,
Mm.
but notice what happened here is that we started on this path and we ate it up 15% to the downside, and notice what happened here. We rallied to a higher high, and everybody was leaning long. I was leaning long. You were leaning long. All of us were leaning long, and all of a sudden Powell comes out a few
Yep.
days later and he's like, "Oh hell, yeah, I'm gonna keep raising rates," and it just completely bull trapped the market, and so all of us need to be on our toes that something like this does not happen. So Dave's gap fill that happens over here doesn't turn into something
Right.
more than that.
And
You
that's
owe
why
it to
I'm just kind of sitting tight. Like
right,
I'll let this week go by. I'm positioned like all my stuff. I've had a bunch of trades close out even on this gap up today and stuff. So it's like I'm in cash ready to go. And it's like, tell me the way, right?
right,
You know,
right. It
you get
just
through, get through Powell and then we'll be good. The thing about it too, though, is, if you, let's just think about it honestly for a second. Why does, if things are so good, unemployment's low, economy's doing well, right? Inflation, is in, at least not going up or sideways, right? Why do you need to lower rates,
you don't, and that's
right?
where the probabilities keep going down. So now
Right.
we have a probability of only two rate
50.
cuts, but
Yeah.
the bond market is telling Powell not to do anything. So if Powell was way behind the bond market, then I think there would be a huge,
Yeah.
chorus of like, "Hey, what the hell are you doing?" But right now, I think it's only a more, what I would call a vanity rate cut of like, "Hey,
Yeah.
let's just cut rates because we can,"
Yeah.
and
But I mean,
we don't want to go.
if you're looking at it purely from, you know, rates affecting, and I'll tell you right now, a 25 basis point rate cut isn't going to do jack for this economy. Not going to do jack for, it's not going to, your HELOC's going to come down a quarter of a point.
Yeah.
Like, and it's at 7%. Wow. Like, really, it's going to make any difference? Like, so, like, what the market wants, what everybody is looking for, going back to the days of 0% interest rates. And that ain't happening unless we get a very big recession or something like that. So, maybe they'll throw one at you at some point this year. There's still the kind of the tough between Powell and Trump or whatever too, and Powell, wanting to exert his power, right, and showing that he can be independent, he's not, swayed and so on. But I think you mentioned it, and it's very important. 10-year ticked up to like 4.5 today, or right around it. Okay. So 10-year, like, why is that happening? Right. So the trade deal or whatever it is, the pause for 90 days with lower rates, right? Because we don't have a deal yet. So let's at least say that. But the trade breakthrough that we had happens, right? We've got these other things going on. Why are the long end of the curve going up? Well, I'll tell you why. We're going to borrow $520 billion this quarter. So that's a pace for $2 trillion in more debt added to the national debt. So that 36 trillion becomes 38 trillion and so on. So we are in the same place we've been when it comes to racking up debt and spending money that we don't have. So if you're going to give us, the United States money, like, don't you're going to lock it up for 10 years? Like, you want some more for your money, right? You want some more premium for your money because this train ain't slowing down, and you heard it here first. We'll see what Congress does, but you watch. Their cuts will be like, we're going to cut, they'll be like, we're going to cut $1 trillion over 12 years or 15 years or 10 years or whatever. And that's just kicking the can down the road because, 4 years from now, 2 years from now is a new Congress and everything changes, right? So it's like, we're going to continue to rack up the debt. So that puts us right back into the status quo. That puts us right back into, if you pull up a 20-year chart of the markets of it just going like this, right? Puts us right back into that, right? That's why the markets over time that's the default position to go from left to right higher because it's not the markets that are necessarily going higher. It's the devaluation of the currency that is just reflecting in the price of the assets, right? So that's what it is, and that's
So do
why
you
the
do you
10
think
year is
do you
ain't going
think
down.
Scott Bessent is going to do anything different then? I mean,
I don't know what he
he's trying
can
his
do.
first salvo. Is he going to be able to do anything at all?
What can he do though? It's a spending problem,
Yeah.
right? And spending is Congress. Like you saw that Doge sent their cuts, and like 20 Republican senators decided not to take the vote up, right? So like, how you gonna get any cuts? So that's where we're at, folks, and that's why, like, investing, like one of the best strategies, honestly, is to buy the S&P 500 and forget about it for 20 years. Like, that's one of the best strategies in the world if you don't want to have to worry about anything.
The
Just do
second best
that.
one is to buy Bitcoin.
Yeah, I mean, it's the same thing,
Yeah.
right? It's just inflates in value, and Bitcoin's finite. There's only so many of them, so it's like a scarce resource in that respect. Gold's been doing what it's been doing because it's now been classified back as a tier one resource. And so that makes it on par with like currency, right? So we've been seeing a lot of people gobble up gold. Now, today's move up is put a nice little pullback on gold. And you and I were talking earlier, and I'd love to see 290. I'd love to see that GLD get below 290. I think that'd be a great entry point on gold, right? But I think Bitcoin is kind of setting up for that leg to 120 that you've been predicting for a little while.
Yeah, I've got. I'm working right now on an exit plan for everything for Bitcoin
Mm,
because there's some certain signals that go along, and we might do this as well with the equity markets. There's certain
mhm.
signals that you will see as the money rotates from the smart money to the dumb money. Like, I mean, what's been happening in the equity markets for over 100 years is eventually the crap rises to the top. What happens is the former leaders start to weaken and
Right.
people take profits in the former leaders. And then what rises to the top is the pets.com, companies like that, that's they'll
Yep.
never survive again, something like that. But just garbage companies float to the top just because they're cheap. What happens in the crypto market is altcoins float to the top. This is that
Yeah.
altcoin rally that everybody's looking for, alt
Yeah.
season. And it really represents the very end of a secular bull or a cyclical bull, I should say. So there are some certain signs that I'm looking at, and I'm trying to actually get into Python and
Mm,
program this such that I don't have to sit there and calculate this every day. And so it's going to tell me basically when to get out. But yeah, my first target is about 122,000 on BTC. That's a
yeah.
partial exit on 122 because
Yeah.
that is a cup with handle, a measured move target,
Right.
and it's a good place to take something off the table. So
Yeah.
I always
And
like to
that,
to to take things off in thirds.
yeah, that makes a lot of sense too. In fact, I think I said it here when Bitcoin dipped to low 100, especially 90, I started buying again, right? Turned it on like every day I was buying every single day. And then just at the end of last week when we got back over 100, I turned it off. Let it run now. Take the advantage of that. Sell out when we get to like that 120 area. Let it fall back to like 100 or 95 again, and then start that buy process again in that same like that same kind of area. And then when it gets to 120 again, stop buying, let it run again. Like that's a strategy I found that works very well for Bitcoin over time. So
So Lexus is asking me, why do you want to exit BTC? Well, not to get too personal, but time's ticking in my clock right now. So I want to take advantage of this cycle. This cycle's been going on since the beginning of 23, so early in 23, about 2 years now. And they usually go for maybe 2 to 3 years before they get tired. So it's not like I'll never ever invest in Bitcoin again. But what I want to do is I want to take advantage. The one thing that people do a terrible job of in investing is finding ways to take profits. So if you're 25, yeah, the point is never to take profits. But if
mhm.
if you got a few years on you, you want to take advantage of these moves and sell into strength when you can.
That makes
So
sense.
yeah, I will re-enter at pullback when the next bear market comes along. I'll go through the same DCA, and now things get even better because what happened is that Coinbase is buying Deribit. So not only do we have options through things like the BlackRock iBit, which are actually very very good. They're very liquid. There's
Mhm.
tons of they're not zero DTE, but I mean there's weekly options on them. They're really good. But also, what we're going to have is we're going to have the spot Bitcoin options and not this crap of, options on 5 BTC futures, which is what Chicago's offering right now, which are only tradable 5 days a week and things like that. So, again, there's going to be so many advantages coming up pretty soon. We're going to see the whole financial world change. We will see the end to this 9:30 a.m. to 4 p.m. crap. That's going to end within a couple of years. It's going to be kicking and screaming to get everybody past that, but it's going to be 24/7. And
Yeah,
so,
you're gonna have 24/7 trading just like you do with Bitcoin.
yeah,
And honestly, AI is going to be very prevalent in that.
we're going to have to because nobody's going to be awake 24/7. So you're going to have to, basically tell a robot how to manage your positions while you sleep. Do you know if it'll be physically settled or cash? Right now, Deribit PTC options are cash settled, so just like SPX options.
Hmm.
And now there was a little bit player called Ledger X. I don't know what's become of them. I think they've basically just drifted away. But they were physically settled Bitcoin options that were based in California. But the options were so illiquid, it was almost ridiculous.
Right.
But really, the issue is if you want physical settlement, then you buy IBIT.
Yep.
You sell IBIT options and you get it in stock. Now, if you want
Yep.
it in, will we eventually do physical settlement on Bitcoin spot options? Maybe down the road. I think before that happens, you get things like futures. We did
Mhm.
have Bitcoin micro futures, but they were so illiquid. I traded them like
Yeah. The
2 years
Mbit.
ago. Yeah, that was the MBTC. It was crazy. Um, and they settled at strange hours based
Mm.
on European hours. It was really kind of odd. So basically, Tasty Trade said, "No, we're not going to offer these anymore. They're too illiquid,
Right.
and their customers are having troubles with them."
I
But
mean, but
everything's
it
gonna
would be nice to be able to
get so
sell
much better.
puts on Bitcoin proper, especially if you got the money. Like that would be a great
Yeah,
way to do it.
that's perfect. But I'll
Hmm.
tell you what, I mean, after I've been selling options on IBIT for since November,
Hmm.
it's been great. I
Yeah,
mean,
you've had a really good run with it. You've been doing covered calls too. I mean, there's a
yeah,
lot of opportunity on that. The options are rich. It's really good. I mean, like pull up the IBIT chart. We can just show that right now. Like, I mean, you look at this. If you're looking at like, if you think, you know, Bitcoin's going higher, right? That's your thesis, right? Bitcoin's going higher. You look at like, um, and I've been doing this more and more. I've been going to my old haunt, which is just selling the 4 to 6 months out, like we've been talking about the last few weeks. But you look at just like, you know, to September in the options change in there. If you want to buy 100 shares right here at 57, you can sell like the $60 call for, $6.40. I mean, you're looking at a 10% plus return on your money, and you get some upside in Bitcoin and you reduce your break even down to about almost 50. Like that's a great, great trade if you want to own Bitcoin,
or you
you
could
know?
turn around and sell the put here
You
and
could
make
turn
ten
around, sell,
percent.
yeah, you
That's
could
10%. Look
yeah,
at that.
you can
That's
sell the put right at the money here and get 10%. Equivalent to the same thing. You maybe not get the upside that maybe to 60, but the point is like if you're a big on Bitcoin, right? These are great easy trades to do and set yourself in, right? And so, you got to think a little bit longer, but I mean, even spreads like I mean, I was looking at it today. The 40 by 35 put spread, or sorry, the 45 by 35 put spread,
for what
maybe
cycle?
on IBIT out to September is paying 80 cents. So you're risking 500 bucks, getting paid 80 bucks. So you're getting what? 15% roughly return on your money, you know?
Yeah,
And you're actually not you're not too far outside the expected move. You could, put that down a little bit, maybe 43 by 37. That's paying 70 cents. Let's try the 41 by 36, just looking at it here. 47 cents, so you're close to about a 10% return. 42 by 38, or 37. You're at about 50 cents, so you're at a 10% return on your money. Like, it's another way if you want to play it, that's, the poor man's naked put, basically.
so
But that's a
the
good way
other
to do it.
the other thing that we've been doing lately is synthetic longs. So
Yeah, synthetic
let's
longs.
say that I'm I'm okay with being assigned at 55, which is just below 100,000 on Bitcoin. So if I'm going to go out here and let's say I'm going to go out 49 days and I'm going to sell the 55 put and I'm going to bring in 230 or so. Okay, so I've got that. Now, this is what the risk profile looks like. This is the standard naked put for that. So, what if I just take a little bit of this, and if I buy a call option, maybe half of this, and if I buy a call option that's out here at the 68 level, okay, so the 55.68, then what I've got is I've got this whole area here This is what I love from this. So if the price goes down, I get assigned, yay. That's what I wanted, right? I wanted to buy it at 55 anyway. I get assigned, I get basically paid to buy it at a pullback. But what happens if, like Dave said, that when you sell a put, your your returns are limited from that. You're only going to make what you sold. You don't get any upside. But what if you spend part of your returns and buy a long call option? Well, all of a sudden now you can participate in the upside, which turns this into a virtual shares of stock. So this is why we love this kind of thing where you can be wrong and still right, and you allow yourself to participate in the upside. Do you know if Tasty Trade also offers iBet? Of course they do.
Hmm.
Of course they do. Let's bring it down.
Yeah, I bet I think is the biggest one of them now, right?
I bet I
Most widely
I
traded.
decided to go after iBet because it's a BlackRock and they're
Yeah.
the big bad evil Death Star of financial firms, just like they've sort of taken over from Goldman Sachs for being the bad guys. But yeah, there's plenty of you're going to find this everywhere. But this is a stock. It's not some micro futures on
Right.
options, boutique little instrument. So this is a very, very heavily actively traded stock. So yeah, guys, if you want to play in Bitcoin, use the iBet for right now, and it's relatively inexpensive. It's only $58 a share versus like trading something like O'Reilly's or AutoZone or some of these $3,000 a share stocks
Hmm.
that have just said goodbye to the retail crowd.
Synthetic trade is just sell a put and buy the call at the same expiration. You don't have to do the same expiration, but you're using the put to buy your call. That's what's funding it for you.
Yeah, it
The
turns it
idea.
into they're both long delta positions,
Hmm.
and so it turns it into now if you go and Google synthetic, what you're going to read is that you're supposed to do them at the same strike price. And that truly turns it into that up and to the right 45-degree angle, just like 100 shares of stock. But what we're doing is we're separating them. That's why we call it a modified synthetic. Some people
Mm.
call them a risk reversal trade, which to me is kind of a weird name that doesn't really describe what it's doing. So it's a synthetic trade, but it's modified. We create that flat spot in the middle where we don't lose money.
Yep.
So that's why we like it. Any other questions for today, guys? We got about a minute left here. Um, we've appreciated being invited into your homes once again, and what's going to happen this week is based on tomorrow morning with CPI. We'll key what happens with Thursday morning and
Yep.
Jerome Powell. We have a PPI as well, 8:30. That's just 10 minutes before Powell. I can't see the PPI really changing his trajectory. He'll already know what he's going to say by that point anyway.
Yeah, and the CPI and PPI have been fairly close to each other,
Yeah.
so as of late, I don't, again, I don't know how much those numbers carry actual weight now versus what he's going to say. But again, you know, I, I, I would, my bet is he's not going to do, he's not going to come on, he's not going to be dovish. Like, there's no point. Like,
No.
based on how they've acted, he's going to hold that status quo. So whatever he said at the last week or whatever is going to be similar to what he says tomorrow. Now, the only thing I could hear him say, because he did say it at the last week, was the uncertainty of tariffs. They didn't know how that would affect inflation and so on, so they're holding tight. Well, now we have at least a pause with lower tariff rates. Does he give a nod to that or not? I don't know.
I wonder
He
if
may just say,
Polymarket has got a
no.
betting line on an abusive tweet towards Powell this week. I think we're due for one. We're due for
Well,
one.
didn't he was out
He did
saying
one
it
the
the
other
other
day.
day, right? In a
Yeah, he
meeting or
did one
something.
the other day.
So,
It's like he's due.
but that's what I'm saying. Like that, I think that just enrages Powell further and makes him more defiant. So,
Yes.
we'll see. But that's where we're at. And I think for me, for my students, guys, we'll probably enter some new trades on Friday. I don't think it's gonna. I mean, the move for the week has really happened here, so I don't know if it's gonna be materially affected that much with your entries. But we'll kind of see how it plays out.
All right. Well, guys, in a week from now, we'll know a lot more than we do today. So We'll just play along. Make sure you're paddling downstream. Don't paddle upstream. Don't make the market fit into a box. Just let it sit back and let it happen and trade along.
Yep.
Thanks,
Cool.
everybody. We'll see you guys
Thanks,
next
guys.
week. Bye now.
Bye.